Greetings, members, one and all of the Salivation Nation. Gold and silver prices drop, and it could have been worse. Let's explore. Yes, we saw a little bit of a discouraging hit on the prices for gold and silver, but it's to be expected, and it could have been worse. Let's see where we were, and let's see where we are now. So here's where the numbers were as of yesterday, and we're going to refresh this and see what they look like now. There we go. Pretty big drop for gold in terms of dollar figure. Gold is down 1.34%. Silver was about almost double that amount in a drop, down 65 cents. It actually that's recovering a little bit from before. We'll talk about that momentarily. But, and as you see, platinum and palladium are following suit as well. Interesting to see platinum and palladium both down $40. Rhodium is rocking though. Look at that, $12,200. Yes, that's right, for rhodium. Pretty fascinating indeed. So let's see what's going on here. This is from Kitco News. Jim Wyckoff says the gold and silver prices are down, but well up from their overnight lows in early U.S. trading Wednesday, pressured by rising global stock markets. Yes, indeed, including new record highs in the U.S. NASDAQ and S&P 500 indexes. New records during this recession. The NASDAQ and the S&P 500 indexes are up. That should concern us, actually, but the market is glowing, and gold and silver are taking a step back from this. There's very little risk aversion in the marketplace at present, and that's bearish for the safe haven metals. October gold futures were last down $7.90 at $1,962. December COMEX silver prices were last down 59 cents at $28.05. It is a busy day for U.S. economic data at midweek, with the highlight being the ADP National Employment Report for August, which was just out and came up at 428,000, which is a big miss to the downside. Forecasts were for the rise of just over 1 million jobs. Gold and silver prices did pair their overnight losses following the ADP report. So this could have been much worse. In fact, this is talking about it here by this article from Jeff Christensen, same website here. They were significantly weaker as expected, as consensus forecasts were calling for gains of 1.25 million. Gold prices have been under significant pressure as optimism grows that the U.S. economy is recovering better than initially expected after it was devastated by the COVID-19 pandemic. December gold futures last traded down 0.45%. While the employment data is slowly improving, economists have noted that the labor market is still significantly weaker in the aftermath of the COVID-19 pandemic. Since March, more than 58 million people have filed for unemployment benefits. Some economists have noted that the latest private sector data provides some downside risk ahead of Friday's non-farm payrolls report. However, they also note that ADP is not a consistent predictor of the government's official numbers. The average divergence since March between ADP survey and private payrolls on first release has been large, at just over 2 million. With the narrowest spread of 680,000 in April, said Andrew Grantham, senior economist at CIBC. As such, anything is still possible as we head into Friday's payroll. Our below consensus call of 800,000 for Friday is based mainly on the flattening trend of high-frequency employment indicators and mobility, rather than today's weaker than expected ADP figure, he noted. So yeah, and things can change in a dime, but that is kind of what made these losses somewhat tepid in that regard there. Other U.S. economic data due for release Wednesday includes the weekly MBA mortgage application survey, the ISM New York report on business, manufacturer shipment, and inventories, the Federal Reserve's Beige Book, and the weekly DOE Liquid Energy Stocks report. Global stock markets were mostly higher overnight. The U.S. stock indexes were also pointed towards solidly higher openings when the New York day session begins. The Nasdaq and S&P 500 hit more record highs overnight. There remains little risk aversion in this marketplace, despite history showing what can be a turbulent 2 months that lie ahead for the global stock and financial markets. Yes, that's right, and mainly because, well, the stock market is propped up. It's propped up right now by all this liquidity in the markets. And boy, I tell you what, White House Chief of Staff Mark Meadows is chomping at the bit in discussions with Nancy Pelosi, who got ahead of the opening of salons a day early to get her hair done without any mask or anything like that out there. Good old Nancy. So that is what's going on there to try to get a deal, to get checks out to us. More of this liquidity out there in the marketplace. Another thing with another stimulus, the CARES Act, the HEALS Act, and whatever they're calling this next version, Part 4, Part 5, who knows? It's crazy what's going on, and more than likely some of that money is going to go back into the stock market. How much can they do? They'll keep doing this. We're going to head to $30 trillion before you know it. It's crazy what's going on, but some measures were already there. Just a matter of allocating the funds and getting that money printed and adding to the actual debt clock. At present, traders and investors are more focused on recent economic data from the world's major economies that has been generally better than market expectations. The euro currency lost some ground overnight after hitting a 1.5-year high Tuesday. A European Central Bank official on Wednesday expressed some concern about the appreciation of the commonly currency against the U.S. dollar. The important outside markets today see NYMEX crude oil prices slightly higher and trading at around $43 per barrel. The U.S. dollar index is higher on a corrective bounce after hitting two-year low Tuesday. The yield on the U.S. Treasury 10-year note is trading around 0.69% today. Technically, the gold bulls still have the firm overall near-term technical advantage amid recent choppy trading. Prices are still in an uptrend on the daily bar chart. Bull's next upside price objective is to produce a close in October futures above solid resistance at $2,000. Bear's next near-term downside price objective is pushing futures prices below solid technical support at $1,900. First resistance is seen at the overnight high of $1,972.40, and then at this week's high of $1,992.50. First support is seen at $1,950, and then at $1,940. There that is. That's got a Wyckoff market rating of 7.5 as it looks into this technical analysis. It's interesting to look at technical data and how that plays into it. But again, there is a lot of science there, but the art of it sometimes blows away the science of it, with psychology being the most prominent factor, I believe. When you look at the silver future bulls, the solid overall near-term technical advantage, a bullish symmetrical triangle pattern has formed on the daily bar chart. Prices are still on an overall price uptrend on the daily bar chart. Silver bull's next upside price objective is closing prices above a solid technical resistance in the August high of $30.19 an ounce. I wasn't aware that silver actually got there. Was that a futures price? I don't remember it ever getting to $30 an ounce. 29, but not 30. The next downside price objective for the bears is closing prices near solid support of the August low, $23.80. First resistance is seen at the overnight high of $28.54, and then at $29. Next support is seen at $27.50, and then at $27. Same market rating at 7.5. So there you have it. I do like to try to keep things with a balanced view. Am I still bullish on gold and silver? You betcha. But I'm bullish, cautiously optimistic. Even with these slight pullbacks, I believe that silver is following gold. It'll run its coattails. And I believe especially it will follow gold. It is only up because gold is up. And even if you close that gap between gold to silver ratio, I believe that silver cannot really hold its own until that gap closes below 50. I believe that is, other than that, gold is wholly resistant. Silver is wholly resistant on gold at this point until that gap narrows. Silver has got to do better and should be doing much better than it is right now. And as we saw, and we usually do see this, silver is more volatile. That is the case. But considering silver's versatility as an industrial metal, and considering where demand and how much silver they're producing, we're not going to see, I don't believe, that ratio narrow a whole lot. I mean, as you can see, it's below 71 again, but really right now it should be below 50. It really should be below 50 right now. So it's been slow to move, even though we've seen it go up from where it was before. I mean, you think about it, it did make a pretty big climb in the paper markets from $12 to now $27.50 odd cents. But, and I understand premiums and all, let's notwithstanding, premiums are high everywhere for all of these metals. But nonetheless, my suggestion to folks out there is to hold on, roll with the punches. These markets are quite volatile for both gold and silver. Some people think these markets are overheated in general anyway, and that we're going to have enough positive economic news, and that once everything slows down, that we'll be heading back in the other direction. The election is going to be something else to keep an eye on. All bets are off with the election, because people are going to react one way or the other. That's going to be a subject for a future video. But as of right now, between now and then, and in between, we are going to see movements like we're seeing. Upwards, downwards, sawtooth patterns. But keep in mind, gold is still above its record high that we saw in 2011. And silver is still doing very well on a price, from a price standpoint. If we look at silver all by itself, it's doing very well. But it still should be a lot higher given inflation and given where everything else is. But from where it was in March, it's doing very well. So there you have it. There is the news of the day. Post your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and pet your kitties for me. Pet the kitties. And if you don't have a kitty, get a kitty and pet the kitty. That's the commandment of the day.